Hello friends and welcome to Baroda BNP Paribas Monthly Outlook. I am Sanjay Chawla, Chief Investment Officer, Equities. As you well know, markets have been fairly volatile since the beginning of the year, having faced headwinds from geopolitical tensions in Europe, a high inflation environment and rising interest rates. Investor concerns are evident in the stock market behavior. While the Nifty 50 closed May lower by approximately 3%, it had witnessed around an 8% slide at the beginning of the month. From a sectoral perspective, auto and FMCG outperformed, while commodities, energy and metals underperformed. Global central banks had already started raising rates, and there was some sense in the market that the RBI would also soon start raising rates. However, the wider expectation was that any such rate hike by RBI would come in the second half of the year and would be staggered in nature. As a result, the RBI surprised the market by going for a rather abrupt 40 basis point hike in the policy rate, signaling a withdrawal of accommodative stance and also hiking the CRR by 50 bips. The immediate response of the bond market was inevitably negative. For the month, the Indian 10-year GSEC moved more than 25 bips to close at 7.39%. Another interesting development during the month was the Ministry of Finance response to the rising inflation. In April, inflation touched a multi-year high of 7.8%, and there are rising concerns that it could come in the way of an already tepid economic recovery. In a bid to control inflation, the Ministry of Finance announced several measures, including cutting the excise duty on petrol and diesel by 8 and 6 rupees respectively. GDP numbers released towards the end of the month led to a bit of a cheer. The Indian economy grew at 8.7% in 2021-22 and at 4.1% in the fourth quarter of the financial year. GDP levels in 2021-22 have crossed the pre-pandemic levels on better performance by various sectors such as manufacturing and construction. As we enter June, markets are definitely going to take a cue from the onset of the southwest monsoons. Going forward, inflation will continue to be a bit of a concern for the markets, and thus a staggered rate hike might play its part in controlling inflation without stemming demand. These factors are likely to be an overhang for the markets in the short term. We remain cautiously optimistic on equities and continue to seek value investment opportunities. That is all from my side. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.